Good afternoon, everyone. So I'm really happy to moderate this panel. So Christine will be on the panel. She has had a nice introduction already. I'm also really happy to welcome Sylvain Prigent from Societe Generale Forge. He will tell you a little bit more about what Forge is doing in the digital assets space. And also Claudia Guagliano, which is at ESMA, the regulator on the European markets. Okay, so we have a broad, a diverse set of panelists. Okay, with regulators, academics, and practitioners. So I think it will be really interesting to dive a little bit into the interactions between traditional finance, decentralized finance, from a practitioner's perspective, but also from an academic perspective, and also, of course, to dive a little bit into what does the regulators also have to say in this interaction, and whether it's desirable, whether there are limits of the potential synergies, and so on. Okay, so this is essentially what we will explore. So we will try to be pedagogic, okay? Because maybe for some people it's a new topic. So maybe my first questions, and maybe Christine you can answer, but also the others one if you want. But could you define maybe in simple terms? So we have had pretty nice examples of what of an aspect of the DeFi space with the decentralized exchange that you just described. But could you define more generally what is decentralized finance? What do we refer to, and what are the largest or the most prominent types of protocols that we see right now?
Historically, we have seen large intermediaries basically interface with customers and interface with markets. What decentralized finance does is essentially disintermediates that. So it splits some of the functions that traditional intermediaries have done and basically isolates them. So the automated market makers is an example of a trading protocol. There are also collateralized lending protocols that look a lot like repo markets, high-frequency repo markets. And the decentralized framework essentially means that instead of intermediaries bundling a whole series of goods that they have historically, now they can be sort of separated out. And so to some extent, we still don't know what decentralized finance is going to look like, because it's still at the active experimentation phase. And we don't know if it's going to be permissioned or public blockchains. So everything is up in the air. Sorry, that's completely ambiguous, but there you go.
No, I mean, thank you. So just also to make things clear, so the decentralized finance, there are protocols that run on a blockchain. Okay, and so maybe Sylvain or Claudia, what do you think why we have that in the first place, right? We will dive a little bit afterwards into the limitations and the risks, but what's the value proposition of DeFi and why people have started to build DeFi protocols essentially?
Okay. I can start with this question. Maybe to present me, I'm Sylvain Prigent and I'm responsible of structuring and development product in Societe Generale Forge. So what is Societe Generale Forge is a subsidiary of Societe Generale for all about digital asset. And in our NDA, we want to be a kind of bridge for TradFi and DeFi. And all our product is focused on a real world asset to be compatible with both worlds. So today we issue securities in token format, but also stablecoin. And from a personal point of view, to answer your question, so I've been working for Societe Generale at Societe Generale for many years now in capital market, and as Christine said, to have access to a repo market, to have access to let's say Euronext, you need to go through a trading member. You need to this trading member need to have a clearing member. This clearing member need to have a custodian, and the custodian need to be linked to CSD, so Central Securities Depository. So there is a lot of intermediaries to be able to exchange, to be able to do derivatives, to be able to do repo. And when I discovered DeFi, it was kind of a magic world, if I can say that, because everyone now can be a trader. They have all the tools, all the strategy to perform what they want to do. So they have access to decentralized repo markets. They have access to decentralized exchange. They have access to lending, borrowing, so repo, derivatives with perps, even if option is not really good today, but perpetual works very well. So it's really a fascinating world, and that's why I think there is some regulatory friction, because now everyone can have access to this world, even if the underlying is not the same. We can say that it's a little bit more fun because there is a lot more volatility. So it could be great. Voilà for me.
Thank you, and maybe Claudia, you can also introduce yourself and maybe address again. We will dive afterwards into the questions of maybe financial institutions using DeFi and all the associated risks. But what's your take on the DeFi space and the value proposition of this?
So I will start by introducing myself. So I'm Claudia Guagliano. I'm responsible at ESMA, the European Securities Market Authority, of all the analytical work related to innovation, consumers, and sustainable finance. Trying to reply to your question and to add something new compared to what the other panelists have already said, I think that what is very interesting in DeFi is the fact that you can have access to financial products, financial services without intermediaries. But also I would like to say that what DeFi tries to do is to replicate economic functions that are already in traditional financial markets, but using a different technology. And I think this is very important to keep in mind. There are no new functions that are developed by DeFi. It's just a different way to provide the same function and to address the same needs that are at the basis of finance.
Thank you. So to follow up on that, now that we have a better idea of what's DeFi and the value proposition, historically it's been started as everything essentially about blockchain. A lot of the first adoption was driven by the retail part of the economy. What do you think about potential interactions between financial institutions and DeFi? We know so DeFi protocols, there are standalone protocols on blockchain. Would or should maybe or even could, from the regulatory point of view, financial institutions use DeFi protocols in any way, or what could be the potential benefits of this interaction? So maybe Sylvain, if you want to comment on that.
Yes, I think in interaction we are really early stage on this field. Integration is all about experiments today, and we did it at Societe Generale Forge. So we tried to find securities in token format that was issued by Societe Generale, and we refinanced these securities through the Maker protocol, so one of the biggest refinancing protocol in Ethereum. So we spent 2 years to set up this transaction, this experiment. At the end, what we've learned, and I think is still relevant today, is that blockchain market infrastructure is more efficient, clearly more efficient, especially when both legs, by every asset are in the blockchain, or at least the same blockchain. So I mean the cash with the stablecoin of Maker, but also the securities that were native to Ethereum. So it was not a representation of something that is deposited in the custody. So it was very efficient. The settlement lasted 4 minutes. It's quite impressive compared to maybe 2 days or 3 days for a traditional ecosystem. And also to have a kind of back office that is available worldwide that is the blockchain, to have the, let's say, the records of all the transactions and the position is really interesting for bank like it, but for all about cost cutting and efficiency. So that is the main point. That is the main benefits. On the other side, so on the drawback, there are a lot of problems because at the end you need to rely on the traditional world, because at the end the institution want to have a dollar and not stable coin, and so yes, you will have all this latency at the end. And one point that I forgot, yes, I forgot all about regulatory, and maybe you could expand on this later, but all about regulatory and compliance. How do you onboard DeFi protocol? To be honest, we find a kind of trick in order to avoid to qualify, legally speaking, the DAO or the protocol. So we go through an intermediary that was a kind of trust in, we call it agent de sécurité in French law. Under French law, so we didn't find the key to onboard protocol, to onboard maker. And when we wanted to go further with maker, it was not possible. So we stopped the new experiments that we wanted to do. So what is missing for institutional, I think, long story short, is to have a kind of framework. And when I say institutional, is more traditional institutionals. I mean insurance, tier bank, mutual fund. I don't speak about crypto native hedge fund or other entity like that. But what is needed is a clear regulatory perspective. What is a smart contract, legally speaking? How you can interact or onboard a DAO? What is the risk associated with DeFi? All this kind of thing is missing. Maybe it will be okay with the new regulation next year, so MiCA 2. But today, it's the only piece that is missing for institutional to come in this world. I think it's my view.
Christine, maybe you want to add something on that. Maybe given with the US perspectives, do you have any insights about? Before we go to the last part of the panel about regulation, do you have any insight about financial institutions in the US that are looking very closely at what's happening on DeFi? And maybe follow up to Marie's questions earlier. Do you think in the end the traditional finance industry will be able to embrace DeFi, or will they just maybe learn from that space some additional concept and integrate them into the traditional infrastructure?
I don't have a first order understanding of exactly what the US institutions are doing. So my understanding, so in the US there is a lot of regulatory confusion about what cryptocurrencies are or aren't, and what tokens are or aren't. And so there, you may or may not follow, the US has a very fragmented regulatory structure. So there's the Securities and Exchange Commission that basically has control over things that we would call equities. The definition of an equity in the US is based on a legal ruling in 1949 on how people were selling shares in Florida orange groves. And so people are trying to translate that legal language into cryptocurrencies, and different people have very, very different interpretations. So it's just a huge mess. Bitcoin is a commodity, so it's regulated by the CFTC, which is a completely different regulatory structure. So there's just a lot of confusion about how to think about it. So my understanding, given that sort of regulatory confusion, is there's been a push towards what are private blockchains, which is basically in-house alternate trading systems effectively that basically are walled off from the public, and they're just a way of automating and reducing transaction costs. So Broadridge is doing a lot, I think, in that area. It's quite possible that what happens in Europe and, say, the UAE is going to be very, very different from what happens in the US. And a lot of people are moving to the UAE, I understand.
Thank you. So
Maybe
that,
just on that, because we have two people. I said you before the meeting, but before the panel, that work for Societe Generale for the United States. And for example, we want to issue security token under US law. So it's not so obvious, and it's really a nightmare. And for example, we are forbidden to use public blockchain. So we need to integrate private blockchain because the SEC. So.
Very interesting, and so that's I think a good transition maybe to ask Claudia about all this, and maybe also focused on the strategy a little bit behind having a sound and clear regulatory framework. Is there some kind of regulatory competitions between North America, the Europe, and what's the state of the regulation?
Right, so where do we start from? With regulatory confusion, I liked it, in the US. No, so in Europe we have now MiCA. MiCA, as you know, is the markets in crypto asset regulation that, however, doesn't cover DeFi. So DeFi is not included in MiCA, but I really think that MiCA is a very good step that has been taken in Europe to try to increase the clarity, to introduce a clear definition of what we define crypto assets. Of course, it's not perfect, and as this sector is also a sector that is, we are talking about a very innovative area, so it's changing very quickly. I'm sure that if we had this discussion 3 years ago, we would have said different things. So I really think that it's very important now that in Europe we implement MiCA, and the full implementation will end at the end of the year, the end of the next year, and then we need to think of what are the areas that we will need to include following, continuing to work on MiCA. But it's also, we are in Europe, and we also have our issues because we are 27 countries. Some countries already had some national regulation related to cryptos. And so what we, as ESMA, we are trying to do is really to increase what we call supervisory convergence. So to be sure that in each country we take the same approach towards the same topic. And in this phase that we call it MiCA, a transition phase, it's very important that all the national supervisors implement the rules in the same way. And this is true in Europe, but as for many other innovation topic and digitalization topic, if we were discussing about AI, probably we would say very similar things. These are topics that do not have real borders, so it's very important that there is a coordination also at international level. And to do that, there are fora that are trying to do that, like the IOSCO. IOSCO is the International Organization of Securities Regulators, where we are also part of that as ESMA, where IOSCO published the report in December 2023, so last December, on DeFi, providing 9 recommendations related to DeFi to try to have the same approach across regulators in the world towards the same topic. And again, these are really topics without borders, so we really need to coordinate across regulators.
Thank you. Anyone wants to follow up on that? Like, what's the? I mean, maybe another. A follow-up question would be, okay? Of course, we want to regulate the activities on DeFi, but given this global world, the blockchain and the digital world, is it really possible? Just like Claudia said, and sorry. So is it? I mean, what should be, or what should the regulators try to do? Should they try to regulate the protocol themselves somehow, to implement some restrictions about how people in general could use protocols, or maybe another way would be to regulate financial institutions trying to use the protocols? Maybe Sylvain, you are talking about the having a clear framework. What do you think would be best to, of course, to generate some innovation and to not forbid the financial institutions to use DeFi, but also not to undertake too much risk, or to think about financial stabilities and everything?
Good question, not so obvious. Regulators, and it's not a critic, of course, regulate intermediaries. It's easier, and for DeFi, it could be the same way. I mean that if you want to use a protocol, you need to go through CASP entity. So it could be a thing, but at the end, I think it's you will miss the core value of DeFi. So we need to find another way. Or we have a discussion with you, Louis, with the CPR and IMF on how we can regulate, or maybe to find a way to make smart contract risk and to have a kind of certification for smart contract. It could be something like that. But I don't have a clear answer on that. So, but we need to find a new mindset for DeFi. It's not so obvious because we don't want to slow down the innovation. I think there is a lot of innovation in DeFi, and when you say that it's only the same thing that TradFi, but with the market blockchain infrastructure, there is new feature. You talk about AMM. It's clearly a new feature. But there is also flash loan that could enable arbitrage in a more efficient way. So there is a lot of innovation. We just need to have an open-minded regulator, and I think in Europe is the case because we have a lot of discussion on regulator, especially for stablecoin, because it will come into force in July, 1st July, I think. So we are in the good way, and we are well positioned in Europe to find. Let's say the break-even for both worlds. So I don't know the answer, but I hope it will be clear in a short period of time.
Maybe I would like to add something, that a key principle is for regulators, in Europe for sure, but not only in Europe, is that same risk, same regulation. So if you see that there are risks that are very similar to traditional financial markets, or anyway that needs to be addressed, you need to have a regulation. I think this is a very important principle. And I also would like to mention that together with MiCA, in Europe, we have the DLT pilot regime, which really tries to do what you were saying. So trying to support the innovation in a way that is, of course, controlled in terms of risk. And I think this is very important because, of course, we want to support the.
Yeah, of course, but it's. I like this kind of debate because when we have it with the regulators, for example, it's what will be the risk of a smart contract? Do you consider that is a counterparty risk? But at the end, as it is open source, you can see the code and maybe you can do your assessment. And at the end, it's not a counterparty risk, but it could be more an operational risk. So all this kind of stuff is very difficult to assess. And for bank and for institutional, at the end, you need to know what is the risk because you need to put capital in front of this risk. So it's not the same risk, but same rule, same risk because I think it's different and there is different risk.
So being a regulator is really difficult, and I'm very glad I'm not one. So thank you for doing that. One thing that I think is, and this sort of goes back to what you said, there's really bad data available in decentralized finance. We think because it's open source, everyone can see it. Yeah, but it's totally impenetrable. The definitions of everything is different. Who knows what's going on? And so even something, so we were talking about this earlier, even something like total value locked, different protocols use different definitions. And when we think about cash flows and accounting in firms, you know, there's GAAP, there's these accredited accounting rules that everyone uses and we all understand what a dollar is on balance sheet. It's not the same thing in DeFi. And so having some sort of quote unquote accredited information agencies that provide valid information that everyone can trust would be a huge step towards allowing the market to verify risks and come up with a number. But at the moment, everyone's just kind of, I don't know. Yeah.
No, good point. No, I agree 100% that the data are really bad. And this is also one of the main limitations of MiCA, by the way, because not to have a too heavy regulation, there is no transaction reporting in MiCA. So there is, and this is a huge limitation because we will not have any improvement in data. But I agree with you that this is a key point, and it's a key point also for us and also for the supervisors, because if you are not sure about even basic measures in the market, it's very difficult.
I think this issue is quite critical. Just maybe a quick question before we open the we take questions from the audience. But is it all this data availability and data formatting and extraction? Is it something that the regulators is looking at? Because it could come from the regulators to just clean up data, to have like because the power of the blockchain is also that real time, and you could perfectly implement some kind of real time monitoring on some of the largest protocol. Is it something that you've looked at?
Yes, but also as of today, I think that still 90% of the crypto assets trading happens not in DeFi, but is more in centralized crypto exchanges, and most of these have self-reported data. So yes, I think it's very important to start looking at the on-chain data, and this is something we are looking at. But it will not give the full picture, so I think that we also need to have some transaction reporting at some point.
Okay, very good. Thank you very much. So we have a few minutes to take questions from the audience. So if anyone has questions, yes.
Thank you. I wanted to ask about CBDC. And precisely because I see a lot of innovation in DeFi, in the protocols, all sorts of questions are being asked, addressed, and I see, there is this paranoia, that CBDC will be used to control the life of people, but before that, the simple fact that CBDC, I feel like, will be unable to absorb all that innovation. So how do you see all those protocol innovation being absorbed by central banks? It looks almost impossible to me.
Okay, thank you. No, CBD. We spend a lot of time with Banque de France on CBDC, and we also apply to the ECB consultation for the new experiment. So to maybe just to start, it's just experimental, and today it will not. I see from my standpoint, it will not be ready before 5 years, even 10 years. So we have time for that. I think they just want to know what will be the infrastructure to issue the CBDC, what will be the operational framework, all this kind of stuff, and what will be the legal framework on this. But they are quite early stage because, for example, at the end, all the experiments just to issue CBDC for 1 day, but they don't want to have a kind of overnight or persistent CBDC because it will raise question on monetary policy, all this kind of stuff. So they are not ready. They are not ready for that. My personal view for that, it will be interesting for institutionals. And I believe that wholesale CBDC will be great for this for institutionals. It could onboard this kind of actor. Retail CBDC, I have the same views than you. It's too difficult, and at the end it will be a commercial bank token, and it will not be a direct CBDC issuance. So yes, it's too early, I think.
So just to follow up on that, absolutely, wholesale CBDC makes a huge amount of sense, and it cuts out the having to have settlement accounts. It's much more efficient. In terms of retail CBDC, it's actually kind of done a face plant. So in India, they had a e-rupee, and there hasn't been widespread take-up. In China as well, the yuan there's not been widespread take-up. People like banking with their banks, and they like their little apps that are much more sophisticated than anything the central bank can come up with. So I think on the retail side, we're not going to see, yeah.
Okay, thank you. Maybe we can take a questions.
Yes, still on the CBDC. How is it going to affect the banks, especially because for the deposit? So if there's, imagine if there's the CBDC controlled by the central bank, so the deposit the banks will cost more because they will have to remunerate the deposit, but because it's very cheap for them currently, but wouldn't it affect the business of banks in general?
I think it's early stage, so I don't have the clear view on that. What I can say is there is a competition between what will be the chain of business between the central bank and the commercial bank. So CBDC could be the first distribution for a commercial bank. After that, it will be a deposit token, so it will be credit, and it will be the same mechanism that we know today. Or it will be other kind of thing like stablecoin. Maybe a stablecoin that could be backed by a CBDC could work also. But
yes, that's what I'm thinking. Like the stablecoin is not so different than a bank in the end.
But it is. There is some difference.
Inside money, that's the huge difference.
Yeah.
The stablecoins are basically because of regulatory requirements and they want to look safe, they're forcing people to buy government bonds as opposed to investing in the real economy. It's really a distortion, I think, yeah.
I think it's two different, for example, stablecoin in the new regulation is the main goal is payment. So you cannot pay yield on stablecoin like an account, a cash account where you can do credit, and as you can do credit, you can pay interest to the user. Stablecoin is really a payment, so you cannot provide yield for that. So it's really two different sort of token. So that's why there is a lot of question on banks, but also on central banks to know what will be the future of let's say stablecoin. It will be either traditional stablecoins that is fully backed by cash or other securities, or it will be deposit tokens that will be a kind of commercial banks that offer credit, and the backing is only the trust that you have on the national bank. So there is a lot of different framework, and it's not clear what will emerge. What I think is that bank and central bank don't like a lot stablecoin because at the end it's not their business. I mean that you receive a lot of interest, but at the end you cannot provide credit. So it's clearly not the business of a bank, and central bank, I think, don't like stablecoin not because it's crypto, but because the process is not good, and it's kind of arbitrage on the yield that provides the central bank. So Ether or maybe Libor for the Fed fund for US. So there is this kind of friction with regulators that need to be clean, and it's really early stage.
Thank you. I think Michel had a question.
I have a question for Sylvain and Prigent. We're talking a lot about blockchain, but beyond the trading tokens, what are the applications which are actually working at SocGen? Like, can you originate bonds on the blockchain? Can you trade bonds? You know, what are you doing at SocGen?
Thank you for the question. Yes, we originate bonds. So we have two products, two financial instruments that we can issue in token format. So bond, all kind of bonds. So we did a covered bond with Societe Generale. We did unsecured bond with EIB, so European Investment Bank. We did a green bond with AXA as investor. So we can do a lot of bonds in token format. We can also issue a structured product, because in Societe Generale we have a lot of a big business on structured product in a token format also. So now on Societe Generale we can offer to the client this kind of new product. So yes, for that, for security token, it's what we did. And also we have a new business that we did last year with stablecoin. So we issue a stablecoin in euro. We have 3 use cases for that. The first one is a traditional one for crypto, is an easy one, let's say. So provide stablecoin that is pegged to euro, because today we only have dollar. Well, maybe there is a reason for that, I don't know. But I think for Europe it makes sense to have payment in euro with stablecoin. We want to use the stablecoin to automate the settlement for our security token, so to have a digital asset leg, so to do a clear and easy DVP, so delivery versus payment, because today it's one leg on the blockchain, the other leg on the traditional payment system. It doesn't work a lot. And the last one point, that is I think the end goal, because it makes a lot of sense for me, let's say, it's all about cross-border payment. Today there is a lot of friction for cash corresponding. And the cash corresponding business case for stablecoin is clearly different. And for example, Ripple, if you can, you can do some research. It's what they want to do, and it's clearly disruptive for bank, unfortunately for bank. But you can do cross-border payment in 4 minutes compared to 2-3 days. And I don't speak about corridors that has bad deserved, like for example, I don't know. French Morocco or French Malta, there is a lot of use cases like this. And so I think stablecoin could be have a great future for that. And we want to open this business case.
Thank you. Maybe one last question. Yeah.
Yeah, it may be a quite naive question, but I want to ask you, because I don't have the full picture, so I would like to know the answer from you. And essentially, I was wondering if you can please compare, if there is any, the externalities of the decentralized finance versus centralized finance. Like, for example, I don't know, the costs, of energy to run the market, of the infrastructures, or validating the order transactions, or regulating, right? We're also talking about regulatory bodies, right? So all these costs involved. Also, for example, on gas or other energy sources, you have carbon pricing, right? So because you have consequences of fossil fuels, and that is cost that the government will cover. So I was wondering, for example, if we take the point of view of the taxpayers or the government, what would be the most efficient way for the government? Would it be better to have traders trading on decentralized finance, or having traders trading on the centralized finance? Which one will be more efficient from the taxpayer's point of view? Thank you.
Thank you for the question. Who wants to address it?
That's a very complicated question. So just in terms of energy, if you wanted to determine whether or not moving things to a completely blockchain world was more or less energy efficient, what you'd have to do is you'd basically have to think about the entire energy use of Lower Manhattan, because 90% of those people are going to be wiped out, right? And we could change that into low-income housing, for example. So, I mean, it is a really, really complicated question, because you'd have to identify the carbon footprint of the existing financial institutions.
But, like, for example, in terms of regulating the market, for example, which one would you think it would be more costly, like regulating decentralized finance or regulating the centralized finance, for instance?
So one way in which regulation is done in decentralized finance is through what are quote-unquote bounties and hacks. So if somebody has a bad protocol, somebody will figure out how to drain it. So then you could, in principle, get rid of the entire regulatory infrastructure, because people would just go bankrupt within 2 minutes if they have a silly protocol. I mean, that's a little bit extreme, but it's a complex question. I don't know.
Indeed, a very difficult question. Also, we have a lot of experience on traditional finance, and DeFi is developing now, so also very, very difficult to say. Conceptually, there are a lot of benefits potentially also from DeFi, but we still need to see how it will develop.
One last question? No? Yeah.
Hello. So in the beginning, why you choose to have a stablecoin based on euro? Why not just use asset reference token that's mean based on a basket?
So you mean why did you choose to issue a euro stablecoin?
Stablecoin because everybody do stablecoin, or Why not asset reference token, which is a broader view?
I don't know what you mean by asset reference token, but there is two kinds of stablecoin. So there is e-money token or asset reference token. But at the end, when we did the legal opinion, we cannot consider that our stablecoin is an asset reference token under MiCA. So that's why we issue e-money token. So I don't know if it's your question. And why we did it? Because all the business keys that I talked previously. And because we think that stablecoin is a good business, because at the end you have an interest rate, you receive interest rate from the cash, and today you are forbidden to provide the yield of this reserve. So there is this business case. There is also security token as I mentioned, but also cross-border payment. So I don't know if I answer well your question, but that's why we wanted to
ART is the same as a stablecoin, but it's broader. That means instead to have one equivalence, you can have a basket.
I know, because we are in Europe, and I think people prefer to have a clear peg. It would be euro, it would be USD, but a basket doesn't make sense for us. Maybe we are wrong, but no, we prefer to. And to be honest, in terms of compliance and in terms of internal validation, for example, the question should have been why we choose euro and not USD, because USD is the main one, and everyone wants to use dollar in the crypto ecosystem. But dollar, to open a cash account in Europe in dollar, it's a difficult topic. So I prefer to start with euro, even if I know that the market cap of stablecoin will not be as high as a dollar stablecoin, and maybe tomorrow we will go to the dollar stablecoin. But clearly, I don't want to start with a basket of fiat, etc., etc. It's too complicated.
Do you believe in the future of stablecoin? Many of them will disappear in 1 or 2
maybe one day it will disappear. Maybe if the interest rate become another time negative, it would be a difficult period for stablecoin. But for now, it's okay.
Thank you very much. So thank you all for having joined us for this panel. Let's give a round of applause for participants.
Thank you.
Thanks.